demonetization, we don't have statistics to prove. So we will all go by an estimate. I would think it's doing a lot of good. I personally believe that moving off all the savings into a formal channel is leading to an increase in demand. Otherwise, you suddenly don't see the spurt in all industries, right? I mean, for the first time in the history of my experience of dealing with banks, I don't hear people talking about CASA. So that kind of, the coffers are full and overflowing, they don't want any more CASA, they're happy with it. So you have mutual fund industry which is growing crazily. You have a life insurance industry which is seeing a phenomenal growth. We have not seen any other external factors. So by view of analysis of all the changing circumstances in the industry, you really have no other option but to bring it down to demonetization, because that's the one single lever which has actually changed. Yeah, it could be a base effect because there was a degrowth last year, but I think it's also about moving from informal to formal channels. Now, whether this is sustainable, because reports are that we are back to moving to cash transactions. So time will tell. Time will tell what's happening.
Right. Yeah. Sanjay, I saw you taking. Yep.
Digitization is yet to scratch the surface as far as I'm concerned. I think when we look at it only as processes and we look at digital sales, at the risk of offending a lot of actuaries and reinsurers, I think digitization is not picking up because we're trying to continue to do a manual process online. Your underwriting tables or your mortality tables continue to be ancient. You still want to do underwriting of a customer on the basis of the form that he fills up and not on the basis of a social media profile he is willing to give you. I do believe that I can get far more details about a customer if he gives me access to his Facebook profile rather than his filling out a form. Are we evolved enough to actually use all of this social media and really convert insurance? Are we in a position where we are able to get access and say, okay, we are your friends, so give us access, we'll give you suggestions. When a child is born, can we push and say, this is a good product for you, buy this now? And then he actually picks it up. I think the whole experience of digitization, we continue to think of it as translating manual processes into automation and digital. And as long as we think like that, to give an analogy, I used to learn French long time back. And I remember my French professor telling me, as long as you think in English and convert it into French, you're never going to learn the language. He says, start thinking in the new language. And I think that's exactly what I'm trying to say for digital. We are not thinking from a digital experience perspective. We are thinking in manual processes, we're thinking in manual underwriting, we're thinking manual forms, and converting that whole thing into digital. We're not going to really get anywhere if we're going to continue that way. And I think I see a few companies, including ourselves, trying to put those brave new steps out there and say, okay, jump this entire thing, start thinking new. Start thinking digital experience, customer experience, and not what do we have and how do we convert that. I think that has got to be the first move in order to encourage digitization in its truest form, which is solicitation, which is service, which is customer experience in its entirety.
Just would like to see, we can't expect insurance policies to be bought like train tickets, railway tickets. The experience all over the world is the customers would like to do a lot of research online, but when they want to actually buy, they would like to touch and feel an insurance company. That's the general trend of insurance, even in a market like US. Still, online is still only a small percentage.
Being bought because they're required. An OMP, for instance, is almost an overseas medical, is almost is a requirement. It's mandatory the moment you're traveling abroad. Travel insurance is bundled. You get into a jet airways site, it's a default travel insurance. You have to untick it to say, I don't want travel insurance. So that ability of the non-life insurance companies to actually get into the affinity and affiliate to a core product offering and offer this as a top-up, I think that's been something that the life insurance companies should probably learn from. Our ability to integrate that way has been more limited. And then you go back to structure. I'm moving a little further down, and then you get to structure. We cannot offer a 1-year renewable individual term today. Forget about periods. We can offer travel for a few hours. You can offer a medical claim for a few days, and a life insurance cover typically for an individual has got to be minimum 5 years. So I'm just giving you an example of how and what are the various factors that will actually impact this entire digitalization. I think from a process perspective, most of us have evolved. I mean, for the past 3.5 years, we don't have application forms in our company. But I think that's been taken for granted now. Process being digitized. I think the customer experience is what we're moving to, and there I think is where one of the questions in your panel came. What can the regulators do about it? I think that's a huge opportunity. Regulators really have rules in terms of defining tax and so on and so forth. And I certainly, for one, believe that they should not. And I think there should be some kind of an inspection which then punishes people for not adhering to basic standards. It's not about regulatory saying you have to complete, because the moment you make it as you have to pay a claim within 30 days, then it's as though that everybody who pays within 30 days is good. Then there's no differentiation for people who actually pay within 2 days versus people who are paying in 30 days. So I think that's, first of all, it should be our guiding principle of, this is a maximum permissible time, and it should not be mandatory of how you pay. That's just from a perspective of if you need to have guiding principles at all. Disclosures, the more disclosures we have, the more nuances there are. If you take a company like ours, we have a 50 lakhs lives covered. You'll find it funny for a company which is 7-year-old to have 50 lakh lives covered, because we do a lot of group policies. Now, the moment you have simplified underwriting and simplified onboarding, you will have lots of fraudulent claims creeping in. So that gets reflected in your rejections, because I firmly believe that for an insurance company, they have a responsibility to pay every honest claim, and they also have a responsibility to not pay any fraudulent claims. I think that's as much a service to the customer by not paying fraudulent claims. So that doesn't come in again. So there's so many nuances to analyzing data. And I think you need people who can actually, the rating agencies and so on, and having a recent discussion with one of the rating agencies, and said you need to be able to look at all these nuances from that level. Unfortunately, I think even analysts and agencies are still not evolved enough to realize what are the various parameters that they need to evaluate to arrive at some kind of a rating. But no, I don't think regulatory stipulations are really the way to go. That's just not the way.